In this episode of Beyond Bitcoin, we talk about September, the BlackRock largest single Bitcoin ETF trading day, $184 million in one day. Of course, 50 basis points reduction in interest, and what this means to the market. We saw the market rise, just the CCI 30, by 10% during that period of time, and October is well set for what many are saying is the beginning of the bull market. Here with me today, of course, is our CIO, Mark Whitten, who, of course, is going to join us today and give us a view of the macroeconomics and also some of the more micro activities that's happening in this space. Hello, Mark. How are you doing?
Good, and yourself, Deryck?
Yeah, very good. You couldn't be anything but after a great month of September and the movement into October. So the crypto market, of course, rose in September 2024 due to several sort of key factors. One of the most significant was the anticipation of the potential rate cuts, which it did. They dropped by 50%, 50 points rather, and making it high-risk assets like Bitcoin and Ethereum a lot more attractive to investors. The CCI 30, or the crypto index, top 30 tokens rose by 10%. The Radiance fund is up roughly 20%, so it gives you an idea of a high-vol fund against the CCI 30. On September the 25th, BlackRock's ETF saw its largest single daily inflow, with some $184.4 million going into the ETF. And that finished the month up with some $17.94 billion by the end of September since inception. So I've got to say, Mark, this also follows exactly what the commentators of Token 2049 said. They had the same view, and the month of October would be the beginning of that crypto bull market. As you've often liked to say, back in the DeFi summer of 2020, that was the beginning of the 4-year cycle. And that was exactly 4 years ago. What do you think that's happening now? Is the cycle in full swing, Mark?
Yeah, I think I try and look for parallels. And as they say, history doesn't always repeat itself, but it does rhyme. And I look for parallels between the last time we saw a very transformative technology disrupt global industry, which was the internet, essentially, and the dot-com boom and what became known as the Amazonification of cost curves as people found a way to do business more seamlessly.
Great.
And I think in 2020 was the first time during the summer of DeFi, as they called it, that we saw something become more than just a theoretical idea that we'd been looking at, but an actual working product with the likes of Aave and Uniswap, Make, etc. They were leading the charge. And we moved away from just being crypto being defined by Bitcoin and to an extent Ethereum into the alts. I remember at the end of 2020, the total value locked within DeFi protocols was just over 200 billion. And that's shrunk considerably over the bear market of 2022 when staking and lending became challenging. And it's now sitting at about 120 odd billion. But I do think that we're going to see now this resurgence of DeFi. If there's any parallels with the dot-com bubble where you have the collapse, they have the infrastructure put in place, then you have this explosion of different companies back then, and then there was the collapse and consolidation with the winners like Microsoft, Google, and Amazon. They'd reinvent themselves as they go along, and new ideas that people hadn't really thought about, like the gaming and the YouTubes, etc., becoming applications built there. And that's where I think we are right now. So I think there's a lot of parallels that we've been through the bull market in 2021. The bear market in 22 had nothing to do with crypto. It was interest rates being hiked way too fast, liquidity being pulled out the system that led to mismatches in lending and borrowing. And unfortunately, there were some bad actors. 2023 saw a recovery, and 24 has been a bit of a mixed bag. We've had the end of 23 into 24, we had a mini bull market, and then we've had this mini sideways bear market. But I think it's also been, the story's been mostly about, as you said, the ETFs. That was very exciting, and the continued flow into that space. What has changed, I think, over the past particularly 3 months, and Token 2049 confirmed this for us, is there's been a massive shift in the focus from a regulatory perspective. So the discussions have become very conducive, very much like they're trying to now work out how can we create global regulatory frameworks that are positive and can actually continue to help the industry grow and also provide security and all those good things. As you said, Deryck, the main things that are starting to fuel the fire, so to speak, that are starting to churn in terms of where we are in the market would be the US rate cuts, which I think are way too late, and it's too little too late. They should be cutting much. They should have started cutting, and they should be cutting much more aggressively. But what also changed, which is interesting, after the Bank of Japan, after the BOJ raised rates, which started this unwind in the carry trade, was also that China realized that their property markets were tanking and they could have some serious liquidity issues. So they've attacked this with credit extension. So they're easing credit extension, they're lowering deposits needed on house. So they're doing a lot and that's a lot of liquidity coming in. And I think the US is going to follow. So I think those two behemoths, the US and China, adding massive liquidity is good for what we call long duration assets. Just to define that, it's assets that in the future have really amazing outlooks, expectations, but in the short term, generally, they're not generating a lot of revenue and cash flow because there's this shift and there's this adoption that's still coming through. So that's why I do feel we're on the bridge or the brink of the second, call it summer of DeFi, even though we're going into winter here in the Northern Hemisphere. And I think a lot of these businesses, these tokens that have proven whether it's the Solanas, the Aves, the Makers, etc., they really are entrenched as industry leaders. So I think Bitcoin will continue to be the digital gold in the ETFs, but the next wave of investment in innovation, which I think will be the second part of this bull market we're hoping to come through over the next 6 months.
Yeah. And these things never happen in isolation, do they, Mark? Because technology is moving ahead at such a rapid rate in this area. What we've often spoken about here is how do you make this simple for the normies? Not intended to be a derogatory term, just so that they don't fuss about which blockchain they're trading on, etc. But a wallet which doesn't have an enormous seed phrase, might be validated by social media validation or zero knowledge proof, etc. And just in the last 6 months, we've seen, of course, PayPal enable the purchase and sale of various cryptocurrencies, primarily Bitcoin, of course. We've seen Google create a Google wallet, and we've seen Telegram create a Telegram wallet. Now, if you put this in perspective, there's currently 620 million wallets out there, wallets and users, wallet/users out there. If you look at Telegram, they've got some 900 million users. And so the ability for them to bolt on a wallet and suddenly, which they've done, and suddenly everybody seamlessly can establish access to this crypto space, it's just one of the many on-ramps that's happening simultaneously in this marketplace to see what I call the value of the market continue to increase, and that's its worth and usability. So yeah, I think that's another thing that's happening along the way. The next quarter and the following quarter, so Q4 and Q1 in this calendar year, what do you see happening particularly in those quarters? Do you think it's going to be fairly soon, the beginning of the altcoin season, or maybe that's going to roll through until 2025? Hard to pick, but what are your thoughts?
So I think as you mentioned, the growth is inexorable. In other words, it's just continuing to roll on, adoption's continuing to grow. I think that what will drive this next bull market, everyone has access, whoever wants access to Bitcoin now, retail investors included, and even institutions, hedge funds, whether it's through ETF, they have that. And I think that'll healthily continue to tick over. And there'll be other ETFs behind that. We've spoken about that. But I think what will take us towards this advancement towards a second wave of DeFi, just to take a step back, when this first emerged in 2020, it felt almost like a bit of an experimental type of field. In other words, a lot of it were great ideas, but not many had been tested through a market of duress. In the bull market, everything looks great. 2022 showed that there was no bailouts, and yet most of these tokens, in fact, all these tokens on the decentralized side, interoperability, etc., and the decentralized exchanges continued to tick over. There was no problems there. There was no liquidity crunch there. But I think what's changed over the past few years, as we've seen through investment through the VC space that's now starting to filter through into the listed space, is number one, you've had a user experience that's become much better. When you first started trying to trade these, going back, wallets were clunky, there was a lot of cybersecurity risk, etc. I think that flowed into the interoperability. That on-chain interoperability became much, much easier. There was this proliferation of bridges that's making it now a lot easier to manage. And then you had scalability. So you now have the layer twos. And particularly if you look at what Solana's doing with Firewalker, like you've got this much cheaper and faster transactions. But from my side as well, when I look at security, when we're investing in funds and also in the tokens we invest in, there's much better smart contract security. So that's very important because managing money, your first role is to mitigate capital loss. And the risk management in the industry as a whole, as well as by the custodians and the vaults and so on, you can't compare it to where it was 4 or 5 years ago. Like people think, even though 2020 is quite recent in our minds, when you look at it now, we're going into October 2024, we're almost in 25. So it's been like nearly 4 years of, very difficult macro conditions to try and understand, including a global pandemic that shut down global economies, followed by interest rates being cut to zero, massive QE that was unprecedented, then rates rising, 2 global conflicts, serious global conflicts, not just small regional conflicts. All of this has been like in such a short space of time. It's almost like you've had more than a decade's worth of activity in 3 or 4 years. And I believe personally that we're going into this next stage where the market's going to start maturing. And what I mean by that is not that the returns will come down, it's that the people will start really believing in and appreciating, but also taking advantage of the applications that are going to be built on top of this in terms of DeFi. We've said smart contracts are getting smarter. I'm very much bullish in terms of where the market is. We've believed in the long-term story. We just have had we've had macro events that drain liquidity from the system or create a risk-off environment, but those headwinds are now becoming tailwinds. So I think we're in for a good year or two, and that could be in global markets as well. I'm not quite certain. And some assets seem to be in bubble territory, particularly real estate, to an extent credit. I think that the world of DeFi and digital asset space, cryptos and digital assets are starting to come into their own, particularly with regulatory certainty. And it's going to be interesting to see because we're seeing a proliferation of new product, new funds, new ideas, new VC that has been worked on in the background is now coming to market. So I think there's the energy in the space, and I think a lot of capital will be flowing into this space. As you said, wallets are no one's leaving the ecosystem. If anything, there's more and more wallets joining, and the network effect is going to continue to grow that. That's 10 million people with a smartphone doesn't help. 3 billion people with a smartphone, all of a sudden you have this massive economy that builds with all the Shopify's and the social media and all of that. And that's where we're moving towards quite rapidly, faster than we thought, in fact.
In fact, the other thing that often happens is that human nature is that we look at each one of these marketplaces as if to compare it exactly with what happened back in 2024. But in 2024, really, we hadn't socialized the term DPIN, which stands for Decentralized Physical Infrastructure Networks, which is a blockchain-based concept where you actually put physical infrastructure and ownership on it. We hadn't even seen the beginnings of what Web 3.0 was, where people could actually lease out some of their phone space, their hard drive, so to speak, or their RAM memory, or their computational power, and be paid be incentivized by crypto, or for that matter, sell energy onto grids, etc., and be incentivized by cryptocurrencies. This really, as a class, decentralized physical infrastructure, it hardly existed in 2024. So it's an entire new class of assets that's getting tokenized out into this. And we're also, of course, seeing tokenization of real-world assets becoming a very standard term now that's coming out. So when we talk about the market, the market's changed, hasn't it? It's got a whole lot of new features and a whole lot of new sections in it, which should see it capable of raising well past its previous gross capitalization number we saw back in 2020, sorry. What do you think?
Yeah, I think a lot of the applications that are going to be coming, we haven't even really begun to think about yet. Someone's probably thinking about them, but it's sitting in a pitch deck at an initial cap intro VC event, which is 3, 4, 5 years from fruition. Yes, so I think that there's, as we said, smart contracts are getting smarter. I think the main impediments to the space were, number one, regulatory uncertainty, because institutions can't touch it if it threatens their license and insurance, and that's changing very rapidly. And then you had, number two, the custody and cybersecurity. That was always a big concern. It was like, who controls it? Can you get rug pulled? So it was all of those things, and that's really grown in leaps and bounds. I think the applications are endless, and I think whether it's when you think about AI and how in machine learning and how that will combine with developers and programmers coding, it starts to really open up. When you think about how the cost curves will be lowered in terms of development, it's the same parallel. Like you go back 20 years ago to set up a website or to have a server, to have your own email, you need to be a big company. Today it's costless. So that's where we're headed. And I think banks, the biggest pushback against the space has traditionally been the financial institutions. You want to hold on to the margins. And I think they've started to realize, look, with this insurance, lending, credit, it doesn't really make a difference. Take a view across any aspect of financial services. The space in the longer term will be able to do it more securely at a much better rate with much more selection globally, not just your local. And I think that should terrify them. When you move into the realm of consumer, social media, consumer type products, once again, the ability to transact seamlessly between, whether it's gaming, whether it's look at NFTs, music, art, like it's almost that there's just it's too much to try and understand in one sitting, and to try to delve a mile deep into this space is complex. That's why I do think as well that there's going to be a lot, because the space is inefficient and it's still very volatile. It's inefficient because there's not a lot of people looking at it, not enough in any event to make it more efficient. But that's going to start changing. I think you're going to have more and more people drawn to the space, more and more liquidity that creates more price discovery, more efficiency. And I think as we saw in the traditional hedge fund world, it moves up the strategies moved up from purely trading to more fundamental and so on, all the way through to where we are today with whether it's global macro or others. So I'm very confident that, number one, we're underestimating by a massive factor where the industry is headed. People are like, Bitcoin's going to make another all-time. I'm not sure where the price will be, but I do know we're underestimating it by a massive factor. And then I think number two, I think there's going to be a massive amount of disintermediation still coming through the space in every area, whether it's fintech, regtech, medtech, name it.
Yes.
And we haven't even got into tokenization yet. So I'm very confident in terms of both the funds we invested in as well as how we're invested, the strategies we've been deploying, and how we also, as the market evolves, we continue to evolve and add new strategies, add new research, add new ways of doing things, both to our fund and to our overall investment process. Yeah. And that's only going to, I say, speed up and grow. We've gone through our time, I think, of pruning 2022. I think now it's going to be a lot more the wave will be a lot longer and a lot bigger than we expect.
Great, Mark. And look, beginning of October, obviously everyone can hear we're optimistic about this. And September was not a bad launch month for this last quarter to see substantial gain. The important thing, I think, for everyone to realize is that this market is rapidly growing in not just its capitalization as it progresses forward, which I always refer to as its price, but as its value. The arrival of decentralized infrastructure, the interface of Internet of Things devices connecting with artificial intelligence and trading and transacting through decentralized finance in a Web 3.0 environment. Hey, don't get me started, but the point is you see that this market is just rapidly growing. And someone said to me some time ago, how long should I invest? And I think they're asking, really, how long should they invest in our fund? I didn't look at it that way. I just said, you should invest in this space for the rest of your life, because this space will continue to grow for the rest of our lives and also evolve along the way. Mark, thank you so much for joining us, and look forward to seeing you back in a couple of weeks' time to give us an update on where we are through the month of October. Thanks for now. Bye for now.
Thanks, Deryck. Take care.